Hello, everyone, and thank you for taking the time to review the Santa Clara County, California real estate market analysis for November 2008. My name is Robert Whitelawn. I'm a licensed real estate broker in the state of California. I'm also a member of the National Association of Realtors and a certified E-Pro. And I'm also the president and CEO of Whitelawn Sons Real Estate Services, serving all of Silicon Valley. Now let's go ahead and jump right into the numbers for supply and demand. We're looking now at the numbers just for past years for the month of October, so we're not having to adjust for any seasonal influences or those kinds of things. And the first numbers we saw come up here were sold homes. And as you can see, we've got a little bit of a boost in sold homes from the same time last year, which is good news. Solds are actually up 20.94% from the same time last year. We sold 618 homes in the month of November. That's 107 more homes than last year. Now, there is some sort of mitigating circumstances. Obviously, we've got a lot of REOs, homes that are currently owned by banks, or homes that are in short sale situations. Now, if you've listened to any of my podcasts, you know what a short sale is and you know what foreclosures are about. Just to really quickly sort of cover that, a short sale is sort of an agreed upon sales price that you reach with the bank that's below the amount you owe. So it's a sale that is short of what is owed. That's why it's referred to as a short sale. So both of these are sort of, one is clearly a distressed sale, right? The owner is no longer even involved. It's just the bank. The bank is the owner. And in the other case, the owner, the private person, still holds title to the home, still owns the home, and they've come to an agreement with the bank that they will allow the seller to sell the home for less than what's owed on it. Now, right now, 55%, 342 of the homes that sold in November in Santa Clara County were of this type. So 55%, over half of the homes sold in Silicon Valley were either short sales or foreclosure properties. So while we've got good news in the amount of homes getting sold in general is up, the type of homes that are getting sold are really a little bit depressing as far as looking at the foreclosure and short sale situation. Now, what this has done is, unlike last month, we were starting to see a return to just a steady increase month to month, or excuse me, year to year, of the inventory numbers. We've actually started to see some of the first signs of recovery that we saw earlier in the year that sort of got reset when the market took its big nosedive. As you can see, we had a really big increase in 2007 in the inventory numbers between 2006 and 2007. The rate of that increase has slowed between 2007 and 2008. I think a lot of that has to do with the fact we've got folks coming out to take advantage of some of the bargains relating to REO and short sale properties. But I'm also seeing some action increases in the more conventional sales areas. So take that for what it's worth. I think a lot of it is an increase in sales because of some of the bad news side of the equation for sellers and homeowners. But at least some of these numbers are starting to head in a direction that works to help the market more than anything else. It's always good when we can get control of inventory numbers. It's always good when sales numbers increase. And we haven't seen an increase in the listed numbers. That's the red bar. That tells us how many people entered the market to try and sell their home. Now, the new listings actually went down 3.81% from the same time last year. That gave us a total number of homes listed of 1,263 in November of 2008. That was 50 fewer homes than the same time last year, so that's good news. Now, inventory was up 10.22%. That gave us a grand total of 5,263 homes currently on the market in Santa Clara County, and that was 488 more homes on the market in November of 2008 than in November of 2007. So numbers are starting to head, or at least trend, in a better direction, at least at this time of year. We'll want to see more of a prolonged trend before we really label that as good news. But at least it looks like our rate of inventory increase is beginning to slow again after it had started to take a little bit of a spike. So take that for what it's worth. We'll continue to look over the next few months and see where things head. Now, like I always enjoy doing, let's go ahead and take a look at the ratio between the total number of homes in inventory and the total number of homes sold. This month, we get 8.52. And what that tells us is that for every one home that sells, there's about 8 homes on the market trying to get sold. Now, that number has been quite a bit higher in past months over the last year, so that's a relatively good number. but it's also up from last month. Last month it was 7.08, so about for every one home that sold, there were 7 on the market. Another way of thinking of this number is how long it would take us to sell off the inventory if the sold numbers, if the number of homes getting sold per month froze where it is, and we just had to try and sell off the inventory we have without adding anything more, just to sort of calibrate you to what that number actually means. So let's go ahead now and take a look at just the more recent numbers. This is just going back month to month now, so you're going to see some variation here that is accounted for really just out of seasonal influences, and then anything outside of the seasonal influences is going to be more just market influence, and those are the things we really want to focus in on. So for those winter months, you're obviously going to see dips in things like average number of homes sold, or the total number of homes sold in each month. You'll usually see a dip in the inventory during those winter months as folks take their properties off the market during the Christmas season. Now here we are in November of 2008. That's all the way over to the right. If we look at the comparison to just the last month, so changes between October and November, solds decreased 24.26%. So we sold 198 fewer homes in the month of November than we did in October. The total number of listings was down 32.5%. That's 608 fewer homes listed in the month of November. And for the inventory, we saw it decrease 8.99%, and that's 520 fewer homes in the inventory than last month. So that's generally good. The sales numbers obviously aren't where we would like them to be. We'd always like to see sales numbers increasing. But if we look back to last year, if we look between October and November of 2007, we can see that we got a dip back then too. This month's a little bit more pronounced, but also we've got higher general sales, but we also had lower general inventory numbers. So what can we draw from this? Are we sort of fitting in with what we saw last year? Yeah, in general we are. Sales were a little flatter last year than they were this year. We actually got a decent peak this year for the summer months that's actually managed to sustain itself longer than it did last year. And again, I think that has a lot to do. That has to do with folks seeing deals out there that they're having trouble resisting, so they're getting some sales going. As far as inventory numbers, do we see any trends here? Well, if you look again between October and November, you would expect to see a little bit of a dip if last year is any indication, and this year we did. So if we extrapolate that to the next month, we should see inventories continue to decline. I think that's accurate. I think we will see inventories continue to decline, and I think we'll also see sales remaining relatively steady as folks just sort of stay in the markets to keep looking. I actually have more folks that are shopping right now for homes at this time of year than I did last year. So, and a lot of them are very much minded on the fact that the market is so low right now, and many of them believe that over the next year, 2 years, when the recovery process starts, that they're going to be able to take pretty good positions on equity on these properties by purchasing them now. So a lot of folks out there looking, particularly at the low end, to take advantage of some of those low prices. Also, I've got quite a few folks that are regularly reviewing my REO and foreclosure report that I have on my website that shows all the properties in Santa Clara County that are currently REO and foreclosures for sale. So now let's go ahead and take a look at home prices over the past years. Now again, this is just the month of November going back to 1999. The average sales price for the month of November in 2008 was $637,593 in Santa Clara County. We had a 39.14% dip in the average sales price. Look at that. That is a dramatic decrease in the average sales price of a home. For a dollar amount, that's a decrease of $410,090. Just amazing. And clearly the market is seeing a lot of buyers that are inspired by that number, folks that are starting to come out to take advantage of that. We're seeing a little bit less of that affecting the higher end, so folks at the higher end of the spectrum are really not benefiting from some of the buyers that are coming out, although that is happening in some smaller cases. But in general, it's really generating a lot of buyers at the lower end, so below the average price, more in the $500,000 or less area. In fact, the numbers I'm seeing indicate that homes that are below that $500,000 point are tending to be the ones that sell the quickest. Now, the highest priced home in Santa Clara County was on Cowell Road in Los Gatos. That home sold for $7,150,000. The original asking price was $8,400,000, so they had to come down by more than $1 million to finally get that property sold. But it only took 30 days for that home to sell. So likely that situation was someone who came in with a lower offer and managed to negotiate the price down. Now, the lowest price down was on Permata Court in San Jose. That sold for $150,000. That was also a foreclosure property. It was asking $156,600, so it just sold for $6,600 under asking price, and that sold in just 21 days. Now, if we go ahead and take a look at these same home price numbers, just going back over previous months, we'll be looking all the way back to August of 2007 to sort of get this comparison. There's going to be absolutely no mystery to this chart, folks. This is, we don't even need to think of seasonal influences. I know typically we have to look at average home prices. When we look just going straight back month to month, we often have to think in our heads, well, wow, what's the seasonal influence that's causing this or that fluctuation or change? Well, there's no fluctuations here, folks. It starts off right around $1.1 million and just steadily makes its plunge down below $687,000, creeping up on $550,000. Now, remember, just to remind us, this month it was $637,593 for the average home price in November of 2008. And we are just seeing, now remember, this is also the first month where we're seeing just about all of the influences, because often you'll see a 30-day delay in statistical changes in the market when something happens in real estate, simply because escrows take about 30 days to close. So we really are seeing November as the first potentially full impact months that came as a result of the stock market downturn we had. So this is showing that we're seeing some pretty big dropping numbers. But look, prior to that, we were already seeing really big drops in home value from May all the way until November. Those drops were just pronounced. So we were already sort of in a decline. I think that situation really just helped to force things down further and faster. We've definitely seen some big drops just over the last 3 months. So it was actually the change from last month, from October to November, is 7.31%. That's a decrease of 7.31% in the average sales price. That's a dollar amount of $50,264. Again, a lot of this is an emphasis on the fact that some of these lower-priced homes are the ones that are tending to sell. Because remember, this is just data about the homes that have sold. This isn't data about the homes that are currently listed. So the homes that are tending to sell more are the ones that are at the lower end of the market. Now let's go ahead and take a look at the days on market. That's clearly the next thing we would care about if we're someone looking to get our home sold. And it also can calibrate buyers as to how much leverage they have on sellers right now. If there aren't a lot of people standing in the wings to buy your house in a timely fashion, then that gives you a lot of power to negotiate for a lot of different things. As you can see, we've got a record-setting November going all the way back to 1999 of 94 days. Dramatic increases from last year, where we sort of saw things plateau out at 60 days, right around there. It's actually up 54.1% from last year, the same time last year. That's 33 more days to get the home sold in November of 2008 than in November of 2007. Now, is there any? Let's go ahead and now look at these numbers just for past months and see if there's any sort of trends that we can glean from this. Now, this is one thing that does tend to be affected by the seasonal influences, but I think what you'll see here is, while there are some seasonal increases and dips here, we're still seeing a relatively general increase. Last year, we saw increases from September all the way up until January. I think we're going to see the same sort of thing. We got a decrease between September and October. Again, I think a huge portion of that has to do with a lot of folks coming out who are interested in foreclosures and short sales. We're going to see, I think, the number continue to increase all the way up until January. That wouldn't surprise me one bit. And then I think we might see a little bit more of an not artificial per se, but we might see statistically an indication that the average days on market is increasing a lot right when we start to see the market turn more into the season for buying and selling, simply because we'll sort of be running through the old inventory of homes. So a lot of homes that have been on the market for a very long time will suddenly start seeing themselves getting sold. So I think what we'll see is sort of an increase in the number of homes sold, but also an increase in the days on market as homes that have been on the market for a long time are finally getting sort of flushed out of the system. Now, the change from October to November was an increase of 18.99%. That was an increase of 15 days from the previous month. Normal for the season and something I'd actually expect. Now, I do appreciate you all taking the time to listen to what I have to say on these market reports. As always, you can find my other market reports. You can also find my weekly podcast or any other articles I've written relating to real estate on my website at www.soldbyrobert.com. You can also find all the various ways to contact me and other great multiple listing service search tools on my website. If you'd like to contact me directly via email, please do so at robert@soldbyrobert.com. Or if you'd prefer to give me a phone call, just dial 408-852-0525. Or if you're someone who prefers using AOL Instant Messenger, Google Talk, or Yahoo IM, you can just use the screen name The Rebel Broker to get in touch. Or if you're somebody who prefers using Skype, just use the screen name Rebel Broker. And of course, all of these are on my website if you want to try and get in touch with me through any of these tools. And of course, referrals are always appreciated. If you or anyone you know is interested in buying or selling real estate in Silicon Valley, please feel free to get in touch. And finally, even if you're not in Silicon Valley or interested in Silicon Valley real estate, I can find the right agent for you anywhere in the United States through my interview process. Find someone who's perfect for your needs. That's about it. Thanks again for listening, and I will talk to you all next time.